Interesting markets. Oil currently now on the way down. As I speak, though, it is right back on the key levels. 69.12 is the level that you're interested in, currently trading 69.0001 area. So this is going to be quite a key area of interest. I can actually bring oil in for you right now. There you go. So that's where oil is currently. So what you'd be looking for is this to start to slow down here, if indeed it is going to fail to get back inside this previous range. Where this leaves you on a profile as well, there we go, 69.12 trades. Where it leaves you on a profile, this is approaching the top of value from yesterday's cash session as well. This is quite a recent move, this one just now. It's a reasonably swift move that we've seen of late. So it'll be interesting to see now the reaction that we do get from 69.12 in oil. 69.12, 69.20 would be the area of interest for me. Note the couple of VPOCs up here as well. That comes in at around 69.30. So you're kind of looking here for the next sort of 20 ticks maybe as your final resistance. If this area can't hold, then it does sort of set you up for a move back up through this range, 70.44 being the target, i.e. the close of the gap. So we've got some space towards the upside if we can get through here. If we fail to get through here and you start seeing a little bit of absorption, you're seeing volume getting built up here. If we start to see that, or we fail here, this is where then you're looking for the roll back down and potentially a further continuation lower. Chances are we're going to open cash session somewhere inside of value. Bearing in mind, value takes you all the way for another 90 ticks to the downside towards 68.24. So you got a fair bit of scope down before you actually escape value. But decision time, crucially for oil, right at the moment, and a decision as to whether this is just a rotation back up or whether we can stay lower. Yesterday's value area, very, very sort of flat edge, poor value area yesterday in oil. So if we do manage to stay inside that 69.20 level going into the cash session, one would expect this to get filled in somewhat. Right, onwards. This is where you are on a daily. Oil has had a pretty heavy drop in the last couple of weeks from around about $80 all the way down to where we are now, $69. And arguably this move is yet to be finished. 64, 63 is perhaps the bigger target to the downside to get through this range that we saw throughout May, June, and into early July. So there is still a fair bit of scope towards the downside in this. And you know, from that perspective, until you're back above sort of 72.50, we don't sort of end the downside just yet. But for the short term, oil needs to get outside, or sorry, oil needs to stay below where it is now to enable that further continuation down. Right, S&P, another market that seems to be very clearly in one direction, and that, of course, for the S&P is up. Arguably, after 2 or 3 weeks of rather stagnant sideways trade, the S&P has now put in what does, to a degree, look like a bit of a trend week. We sold off yesterday after CPI initially, no further continuation, and come then the cash session, the market reverses back up, new highs, and then a very, very stable end of session and overnight session for the S&P, sitting in around about a 3-handle range. So extremely tight for the S&P and still really not going anywhere so far on the day. Very, very muted. That said, we are now higher. So where we're opening today enables a further continuation towards the upside. And until you really get below the CPI spike, get back inside of yesterday's cash value, there's no real reason to see too much downside. This is a market that's very, very bullish anyway. Is there any reason to really think that this has to come off in any great deal? I'd be surprised. So where does it go then? Well, the next point of call is, of course, year highs at 47.38. If indeed this is the Santa rally, as everyone likes to call these types of things, which obviously in hindsight, we can all say this is a wonderful Santa Claus rally. I think the problem was no one believed in it all the way up here, and rightly so. The turnaround was unbelievably fast off those lows. and seemingly without huge amount of reason. So very hard one to actually get into. I was talking to Eric about this one yesterday, that it's a situation where you don't want to buy it, but you can't sell it, i.e. there's nothing that enables you to sell it, but you also don't want to buy it anymore because of how far it's come in such a short period of time. Consolidation recently perhaps does put paid to that to a degree and does enable now the continuation or belief in that further continuation towards the upside. So 47.38 the next target until you get back down into the recent range. Gold's perhaps got a little bit of interest today, particularly going into the Fed. It's rather stagnant so far, so it doesn't exactly suggest that we're going to get too much action. But what we have got with gold is a failed inside day break to the downside. There we should break in the morning, this little break below 1992 and straight back up. Since then, we have done nothing. But whilst you're inside the previous 2 days ranges, it does now suggest that a move back through value is perhaps the more obvious of trades, and even up towards 2008 being your target. 2008, when you look on a chart, you're looking perhaps towards 2006. 08 was the low volume created on the back of the CPI. So I'd actually be thinking 03.5, 06, 08 as my next targets. But this tail to the upside does still keep a little bit of a cap on gold to the downside. So overall, I think the bias is down in a broader sense, but if you look at the delta on the last 3 days as well, you look at the failed inside day break to the downside, it does certainly enable a movement towards the upside a little bit easier in gold just at this point in time, and a bit of a relief after the recent sell-offs that we have seen. Another market that is not massively dissimilar to gold in the sense that you've got this big tail created by CPI yesterday, and I saw some people talking about this on one of the blueprint groups. I'll get back to them on that because I wanted to sort of make a point on this anyway. But what we are now in a situation with euro is a question of the CPI tail, which is a bearish indication, that very, very clear tail towards the upside, rejection, versus the shift higher in value that we got yesterday on the back of an inside day and on the back of a trend break. So you're trying to weigh up what's the bigger deal here. Does this suggest that the move up is already over and back down we go? Or does the shift higher in value, the break of trend, the inside day break suggest that actually a retest of this tail is perhaps more likely and that we can still continue higher? The tail does take you up to the first obvious area of resistance, this excuse me, 0827, or sorry, 0823 area, 0820 area roughly, is taken us up there and come back. So really a bit of decision now for the euro. It's quite balanced so far, but it's got scope either above value, above the highs from Friday, or we get below value back into Monday's range. There's not a great deal about Monday's range that doesn't suggest we can't move all the way through it, and a reasonably bad low as well to be going and targeting. That takes you down towards 0745. There's your bad low. And if we can break that, then you've got further scope towards the downside.